Come in, everyone. Before I get into this early afternoon live, and as we can see, it's much earlier than when I normally come on to do my live, but this is likely going to be the live I do today. But I'm going to try, I want to do this leading into not only the FOMC decision, but so that we can watch Jerome Powell at, I believe he's going to start at 2:30 actually speaking. But we're going to find something out about the market around 2 p.m. Eastern Standard Time with this rate cut decision or rate hike or stay the same. Echo. I don't know why it's echoing because I do not have a... Oh, wait a minute. I don't know. I'm not sure why it's echoing, to be honest with you. I did move something slightly around. Is it echoing for everybody? Oh, I'm going to grab... I did move something, so hopefully that helped. I need to grab something to wipe my glasses. Oh, you know what? I don't have to go anywhere. Because Julie got me a cool new desk. And because of that, Julie, I have the thing to wipe my glasses in my desk. They're saying, oh, no echo, no echo. Oh, okay. Good, good, good. So if you do have an echo, just restart it then. Restart it, because sometimes there's an issue with things like that. And if you're not getting the best possible look in my content too, with the tablet that I have, especially the new one, this plays things in high quality, so you have to go into YouTube, go into your video, and go to where it shows the video settings, like for the quality, and change it from recommended to the high quality so you get the highest content output. Especially when I do my updates, I put it in much better than what most people put out standard on YouTube. It takes a little longer to upload, but I have the capacity to do it with this tablet, so I like to do it. So make sure you do that as well, because that definitely would hinder my content. So anyhow, we're going to have this decision at 2:30 p.m. At least Jerome's Powell speaking, but we'll know by 2 o'clock. We'll know by 2 o'clock. I'm glad it's crystal clear too. My son, he's stuffy today. He's a little sneezy, so his teacher called us at like 10 o'clock, and we picked him up a little early from school. A little sensitive towards tea, not just because of his past things that he's had to deal with, obviously, but one of his classmates was sick, yesterday? So
if you get interrupted.
Yeah, so if I get interrupted, you'll understand why. But one of his classmates was sick yesterday, and it wasn't as bad, but by the time they got home, they were running a fever and stuff, so, his teacher's really sweet, so she wanted to make sure, but he's actually doing really well right now. He's sneezing a lot, and he's stuffy, but, in Michigan, it's going from hot to cold, and it's thawing out right now just to refreeze next week.
Cold, hot as in 40 degrees.
Yeah, for us, hot is 40 degrees right now. Like, it's hot outside right now, it feels like, and it's like 37, but it feels warm. But, anyhow, what I mean to say here is that, we're going to watch the market. If the feeling around, and like I've been trying to say the last few days, what my feeling is, if you've watched, when it comes to the rate cut, rate hike, or stay the same, I have a feeling, because Japan raised rates, I don't think we're going to raise rates, but I have a weird feeling that they're going to stay the same. And if they stay the same, Trump's going to immediately come out and talk about how they need to cut rates, and I think this is a dog and pony show. I know Trump and the Fed is on the same side here. So if you're a fan of rates being cut, I am not, but you're going to be a fan of what comes next after today. So probably by February, but you'll be a fan of what comes in the longer run. If you're like me and you want rates to go up to 20%, and I'm not joking, I want interest rates to be at 20%. And here's my argument for everybody who doesn't want it. How many of you in my audience has a credit card? How many of you in my audience doesn't pay that credit card each and every month? Because I know most of you don't if you have a credit card. I do out of principle. But on a credit card, it's already 25, 30%. So you're willing to give it to a credit card company. But yeah, I have no debt either. I have no debt. My house is paid. I don't want to go through it, but I don't have debt either. I used to have a ton of debt. And I use the credit card simply for, I pay for everything on the credit card. And at the end of the week, I always pay it off, usually at the end of 2 days because I don't like to see a balance. But I get free points out of it. You get free money if you use your credit card. That's the trap. Hey, you get 1% per purchase or 5% on a certain amount. I've got like 3 grand saved up that way. I'm going to do something extreme in my backyard with the credit card points. But, you know, you got to be very, you got to stay on the ball, otherwise you're paying interest. But my point is, I want 20% interest because at 20% interest, which isn't going to happen, I promise you, because we're going to have negative interest rates by the time Trump is out of office, in my opinion, for the likely. Well, let me finish. We want 20% interest rates because think about it. If you have $100,000 in the bank and you're getting 20% interest, that means every year you're going to make 20 grand on your 100,000. That's what my grandparents did. That's why when they actually had a reason to save money. We have no incentive to save money anymore. When it was at 5%, even at 5%, I mean, it's not even staying up with inflation. But you were getting a better return on gold and silver investments, depending on how long ago. So I would rather have 20 or 25% interest rates, knowing that I don't carry debt. It wasn't always like that. And I'm not looking to take out loans. Like, I'm doing my house. I'm not doing it on credit. I'm not taking out a 5-year financing plan. I'm doing it in cash, or AKA my crypto investments that paid off. And then I put it into my crypto.com. You guys know the deal. I'm doing my windows and my kitchen at the same time right now. And it's going through the final phasing right now before they actually come and do the work. So February 12th is the window, and it's any day it's coming down to now because they're doing the customization for the kitchen right now in-house. And then they'll obviously start working on the house. But the point is I have no incentive now to send $50,000 off of the exchange and let it sit in a bank account for what? So I can wait for the eventual bank balance so that I have to pay the bank to hold my money. So like the better opportunity now is like I hold algo, I hold certain things. So like because I'm verified on crypto.com, I sent it over, some of them over to crypto.com simply because they'll pay me 1.5% to stake certain things for 3 months, you know, or pay 2%. Or on CRO, you get a little bit more. And there's one I've been staking for a little while now after it went down to the bunch of 0 and 4s. I talked about it earlier. But there's a few of them that I'd like to, oh, it's not on here. Oh, that's because it's on my phone. No wonder you guys can never see it. Hold on, I gotta find my phone. This is actually a governance token for CRO, and I think it's an important one too. I know every time I talk about it, it's never on here, and then I always forget. I always forget because it's on my phone. But anyhow, there's different ways to capitalize within a savings on certain things. There it is. Some of you will know what this is. If you're a fan of CRO or the crypto.com ecosystem, you'll understand what this is. I almost guarantee it. Kind of a sleeping giant to me in a way, just because of what it does. And it dropped so much that I finally felt the need to buy it. And now I started staking it last week. Actually, 2 weeks ago now. And now I want to see what it does. I don't care how long it takes. But I mean, that looks like a pretty healthy recovery that could be taking place here. I mean, that's almost, I don't want to say anything, but I'm just waiting. But I've been given, you know, hints that I've owned this thing for a little bit now. It's a governance token, so I mean, it's on the CRO ecosystem. So I mean, you could technically call it a meme token. You can call it a meme token. But like I said, I'm watching a part of that pattern, and at the same time, I'm letting it sit for a few months and just stake it and see what happens with it. But yeah, for all intents and purposes, that's just playing off the CRO ecosystem. What's the ticker, Tom? I missed it. Oh. Right here, the one at the bottom. It's BARA. But I would type in, a lot of times if you're looking and you don't just put it in the crypto section, I would just type its name. The market is going to drop either way before it bounce back up. Big guys will say everything to buy back lower. I have some chips to buy something today. Excellent. Excellent. Yeah, I grabbed on Testicular Tuesdays yesterday when algo was down 6.5% live on air. I bought 1,000 more algo as well. It's barely up from there. But I have 31,000. No. Yeah, 31,100 algo now. But who knows? Who knows with some bad news? Like, we've been talking about the possibility that maybe we have a hangman situation or a hangman pattern. And we seen it in 2021 in XRP. And like when you go into the daily time frame, I'm not saying that's what we have, but it's just something to watch. It's just something to watch. And thanks for the $2 donation. It's all an illusion. I appreciate that. Yeah, with DGB, I have 1.2 million. But if DGB falls under a sun again, you know I'm back buying more again. So, absolutely. Well, that's why I keep staking. I'm getting, like, I'm trying to explain this to people because, yeah, and it might cost you a different price when you buy on crypto.com, but I'm advising you to buy on a different exchange and then send it over there. Almost virtually everything that you can buy on another exchange, if they have it on crypto.com, you can simply just send it there. You don't have to purchase it there or send it off via their ecosystems individually, like the XRP Ledger and such. But I have the Ruby card, and like, I'm not even joking. I only talk about it because the amount of rewards they give you is asinine. Like, I'll buy something and then I'll send it over from, like, let's say I have to buy something on BITUNIX. I did it before. And I sent it over, and then all of a sudden, because I sent it on there and then it put it on there and then I staked it, they're giving me CRO, and I didn't even realize it, but I had like 3,000 or 4,000 CRO that I didn't even buy. I didn't buy any of it. They were just giving it back as 5% rewards for using the CRO or the credit card, the crypto.com credit card. Like, it's insanity. And if you're used to getting rewards on a credit card, this is even better because now you're getting it in crypto, but you're only spending your own cash. You're not using it as credit. You're using credit in a sense because you're prepaying that card, but you're getting rewarded as if you're using a credit card in CRO. It's freaking ridiculous. And somebody in here knows what I'm talking about. It's crazy. Like, I did not realize it was to that extent until I started using the exchange a few months ago. Actually, it's about, what, 4 months now? And then once I got the first CRO card, or the Crypto.com card, I'm like, no, I want the better one, a little bit better. Holy smokes. But yeah, I would highly encourage the CRO card, or the Crypto.com card, for the reasons I just stated. And if you're looking, I always put it in go to my homepage on YouTube. I'll put it in the video description below after this video. I'll get the link right now and put it on there so you guys can see it. But it's right there. Whoops. It's the crypto.com one. And Julie knows I've been using this everywhere. And it's awesome. And like, it doesn't seem like a lot, but every day I can take $400 a day in cash out of the ATM. And like, I'm not looking to take thousands out, but the fact I can do it every single day without hesitation is crazy. The fact that I can use it anywhere. This is how I use this card to pay for my kitchen, the first third of the $26,000 and the first third of the $12,000. I mean, it's crazy. So like, I would rather get points like that instead of having to do it on the credit card. So now I find myself a lot of times just using the prepaid card, and then I just refill it up. You know, and I actually like it a lot. But then again, you know, everybody's got their own liking and whatever. So, but I always try to get as much money as I can for money I have to spend anyhow. It's just something I've been doing for a very long time since I figured out what money actually was and how to use it against, you know, not just yourself, but when they lend you credit, there's always a catch. Or when they give you rewards, there's always a catch. So if you're one of the people that's very resilient and you understand finance and you actually, you know, don't take advantage of the system, I know it sounds stupid, but you use the system. So like with a credit card, yes, you have let's say you have one of mine's an $18,000 credit limit. And what if I max it out to 18,000? Well, now I'm screwed. I'm paying 20 something%. I'm never going to get out of the minimums. Or you don't even come close to it, but hey, you spend $1,000, then you pay it off in a week or the same day. You get the points now. So you've got the flexibility of not having to have your own cash on you. Plus, I would rather spend, when I make a purchase of something, when it's something I'm not sure about, I always like to buy it with the credit card. Because what if they don't deliver it like they're supposed to? What if it doesn't work? What if they screw me? I'll just tell the credit card this thing's a piece of shit. And as per our agreement, you're going to have to wipe this out or contact them and figure out why it's such a pile of crap and they're not honoring it. So, you know, there's ways to use it. But anyhow, so many ways to get yourself in debt too. That's why, you know, debt-based living is that's what I'm all for. I know a lot of people tell you to, you know, in real estate, you can take debt out and all this crap, but I don't know. I like the debt-free living personally. And, I don't need anything too extravagant, you know? I live below my means, and I'm proud of the fact I live below my means. I don't want to live above them ever again. So that's the crypto.com. That's that website if you're interested. And I have so much stuff on there, it would make your head blow up. Literally. It would. Because most of my stuff I just leave there because if I sell it, obviously for tax purposes, it's at least got a record there so I can use that for my tax purposes. And then other things. But anyhow, we got to look at the news because something just happened with the FOMC. Something just happened. I need to go to X. Something just happened. Do you pay tax on those crypto rewards they give you? Does it count? In theory, you would, but it's classified as a different thing. But you know, I haven't had to yet because it hasn't become time yet. I just started doing it in the not so recent past, and I didn't have enough for 2024. So anyhow, let's go to X, and let's do the intro. Good early afternoon, 2 p.m. Eastern Standard Time on this Wednesday, January 29th, 2025. I'm XRP Future Millionaire, and I reside in the great state of Michigan. Because like I've been saying, I think they're going to stay the same today. No hike, no cut. That's my anticipation. Because Japan raised rates, so I don't think we're going to lower them, but I think Trump's going to get a little pissed off. Has announced no rate cuts, rates unchanged. I knew something was happening because the market started going volatile. But this isn't terrible news. I wish they would have cut rates when the market wasn't expecting it because the market would have flew up in crypto. But yeah, this is what I was expecting. This is what I was expecting. And the Fed is trying to say, you know, it's a lot of stuff. So it breaks down the 11-1 vote for federal rate cuts. Oh, that was back in January or September. But yeah, that's what I was expecting. So now let's go try to find the FOMC meeting real quick. Or I mean, Uncle Jerome. Let's go find Jerome. See his bullshit. What's this crap? Who's this guy?
Like a Steve Leishman quoting a Fed rate hike, not a rate. The S&P yields have kicked higher as well by a couple of extra basis points. At the front end by 5, on a 10-year now up by 4. The line on the labour market.
Yeah, let's watch it. Let's see what's going on.
It's like they've buried the scare of the summer, and that they're now satisfied, almost comfortable that unemployment can stabilise at these levels. And Mike, I'd wonder what comfortable that unemployment can stabilise at these levels. And Mike, I'd wonder what you say about that.
At this point, it doesn't look like they're thinking that the labor market is going to rapidly decompose. There are some signs that things are getting a little bit slower. We're not seeing people get jobs.
We'll see how this plays out.
As they did before. But right now, unemployment is still low, and it moved down in the last month. So as long as that's
DGB, for some reason, is going against the grain to start.
Worry about it. A real deterioration.
A couple of them are Doge.
But they're not seeing that now.
IOTA.
Looking forward to your questions in that news conference that kicks off in about 27 minutes.
This is going to be extremely volatile. So we'll continue to talk about this. We'll go over some news for XRP for the next 27 minutes because we're going to treat this as a normal live. And then at 2:30, we'll catch up with old Uncle Jerome. And then I can, you know, be around and do what I got to do for my son in case he's not feeling good or whatever the case may be. The market's going to do anything but move sideways, my friend. For crypto, it's going to be very volatile. Just like I said in the title, very, very volatile here imminently for XRP. Because we did not cut rates by even 25 basis points. And we all know that it would have been very bullish if that would have happened. But with the rate staying the same, we're going to see just how big of an impact this has. Because a lot of people are anticipating the rates to stay the same. And like I said yesterday, we were having one of those moments saying, this is the make it or break it moment within ourselves. Like, are we willing to ride this with the incoming volatility, knowing what we know? Or is that a top that we found and we're having a hangman? And we talked about it yesterday in the live, and we decided that right now, where the market's at, they can kick us, punch us, push us, and, you know, do whatever they want. But they're really going to have to force and shake us out of this market because it doesn't seem right. And we know for these 60 days, you know, at least under 60 now, that is going to be very, very volatile. As all of these, let's say, unwritten signings by Trump are going to be put in, you know, eventually into place, but it's going to take a few months. So it's no, the problem is you guys don't understand. This is by design. You don't want him to cut rates, but now what's going to happen is Trump's going to come out, I guarantee it, and he's going to say, "Oh my God, we need to be cutting rates, not keeping them the same. This is ridiculous." And they're going to get on the level with that. I'm telling you, this is going to turn into rate cut central, and before you know it, we're going to have negative rates. I'm telling you, that's what's happening right now. If you don't believe that, you have not been paying attention. This is going to end up being negative rates. So I encourage everybody, get your money out of the bank while you can and figure out a different way. Like what I'm doing for anything, like you got to figure it out. JP Morgan's going to be around. So if you got to put your money somewhere and you got to have a trading app or something, use the JP Morgan trading app. If you want to, by all means, go for it. But that's at least on an investment part. You can put it in a self-directed fund, whatever you want to do. But the money that's going to be sitting in the bank, it's going to be an issue at some point. We're going to have to pay them to keep it in the bank. At least when it's in your investment portfolio, you're not going to be paying them to hold it in the bank. And then you can take it out as needed or whatever the case may be. By then, you might have to take it out by your fingertip. Who the hell knows by then? But, you know, we're going to have bank bail-ins and stuff down the road. This is all part of the design. They needed to keep rates the same today. They had to. Oh, yeah, think about that. For anybody who has $100,000 in the bank, you're going to have to pay interest on that $100,000 in a negative fashion. So instead of getting paid interest, remember the 20% I wanted? That's why when everybody kicks and screams and says, "Oh my God, yes, Trump, we want negative rates," we're literally cheering for our own slaughter. I said this under Biden too when we were begging for lower rates. We're cheering for our own slaughter. And this was signed into law. If you don't believe me, look under the act by Obama and the last bank bail-in in around 2008 or 9. He signed in the law that said this is the last time the government will bail out, which is actually us bailing them out. It's not the government. They're just taxing us for it. They should have said it's the last time the U.S. citizens are going to bail out the bank. But they said it's the last time that they will bail the banks out in any capacity. And next time, and that was the agreement for them to bail the banks out at the time, that the next one would be a bank bail. And that meant anybody who's a holder, who's a proprietor of the bank, you're now being looked at as a shareholder in a sense. So if the bank needs capital, they're drawing it from you. So if they deem, so let's say the bank's insolvent and they deem they need 2% per client to make it work. So now they need 2% working capital, which means they charge you with a minus 2% interest fee, which means whether you have $100, which would be $2, if you have $1,000, do the math. Do the math. It starts to get a little bit more, $20. Then you got $10,200. Right? 100,000, 2,000. Or, yeah, you see what I'm saying? That's the point. It gets a little ridiculous. It gets a little ridiculous. So, do you really want to be giving away 10 grand for every $1 million of your own money and interest rates? Isn't that what it would end up being? No, 20 grand? Yeah, 20 grand. And interest payments? Or if you have $100 in the bank, you want to give up $2 in interest? It doesn't sound like a lot, but it is. If you have 1,000, you want to give up $20? No, you're supposed to be getting that. Remember how we would look at it and say, that's it, we're only getting $20? It's a lot better than paying them. So now I got to pay you to hold my money? Well, what the hell? Do you know how quick people would leave the bank? That's when you get the bank runs. That's when you start to not have any money. That's why I keep informing my audience. Make sure that you have precious metals. You have cash on hand, whether that's leaving it in a safe, a vault, in the ground somewhere you know safe, or leaving it with friends and family or in a wall. I don't know. Do whatever you have to do, but, you know, make sure you have arms abroad because when the times are rocking, You know, people are going to come a knocking, and I'm not even joking. It's really going to happen. That's why I have no preparation in my own house. Outside my house, me and Julie have to go like, I don't know, it's a few hours from here to get to where I want to go or where we need to go. But still, it's doable. Because I would know, I would be forward warned with myself, and I would know where I'm going. I call it the bunk out. Because you're going to need somewhere other than in the city. So, you know, but that's all down the road. But short term, the market's reacting to the fear. And guess what, everybody? As this keeps happening, the fear and greed index goes down, and this is good. It's all the way down to 50. I don't remember the last time it was at 50. This is good. Now we're getting into pretty neutral, but now the flavor of the month is leaving. You know how we know that it is not good for crypto at the exact moment? Too much money's running into memes. I kept saying this. The problem with I love Trump, and I'm going to continue to phrase this. I love Trump. I've been saying this for 8 years. Well, 4 years to you guys. I like Trump. I like what he used to teach me when he wasn't a politician. I like the fact that I know more about business and how to not cheat the tax code, but use it in my favor. And I understand real estate and so many other things from that perspective because of him. But I also knew that meme token marks some kind of a top. It doesn't mean it's the ultimate top, but too much money was flowing into the meme market now, because what ends up happening is now everybody makes a little easy money, or they lose a lot of cheap money, but that cheap money has to come from somewhere. Remember, when money leaves utility, it doesn't just go to money heaven. It's trying to find another place to run. So the money left utility, but now most of that money that left utility wasn't leaving it before on the Trump token. That's what I'm trying to say. Most of that money that left, you're already seeing it at $50, $60, $70. And people are thinking this is the next easiest thing to Bitcoin, and this thing's going to 1,000 and 10,000. That's what people were thinking. Now they take all of their utility money that should be safe. This would be the equivalent of taking your money that's in gold and silver and tossing it into Bitcoin at 110,000 or 100,000, like Robert Kiyosaki suggesting. So then you end up taking that, and you have your sure money and utility that you've built for, and you don't even care if it goes down. That's the thing. You don't care if it goes down. You've been working on this maybe for years. We've been doing this for 4 years in and out of cycles. This is our third cycle now. And we're happy. We're happy where we're at. We've got it set the way we want. Imagine if you would have sold, and I know there's a few of you in the audience because you told me you did it, and where Trump token's at now compared to where it was. And then there's also the other one. Forget the Trump token, the GOAT token. The majority of the people that are pissed off in my audience right now because of XRP that'll complain about the price, it's not because they bought it where we did. They may have initially, but some of my audience that were with me for years and understood the philosophy and the plan sold it out because the GOAT token, they thought it was going to go up to like literally $100 real quick or $10. And I told them, and I even showed the thing where they were offering to pay. I showed it on air. They offered to pay me up to 100,000 GOAT tokens for free, depending on how good the publicity was or how much I would talk about it or what I would say about it. And then it showed conditionally I couldn't sell it. I believe it was $1.18. And I said, if you're in the GOAT token, once it gets over that price, if it's saying that if I were to use it, that means every other influencer is talking about it. So, and then that dropped off, and so many people who switched out of it, they sold out of XRP at 50 cents when the GOAT token was around the same, maybe 40 cents. And they watched the GOAT token go up to $1.18, then $1.50 or whatever. They didn't care. They just were holding it. At the same time, XRP is going up, and now XRP is at $3. And I only say this because where the hell's the GOAT token now? I'd be surprised if it's even at 30 cents today. Like, that's the crazy thing. 19 cents. I mean, that's the point. I wonder why it went down here. No, remember those influencers who were talking about it? I bet you none of them are talking about it now. Now it's getting into the range where I might buy it, ironically. No good meme ever has no good deed, because remember, all the people that got in here, right? Most of them didn't get in down here. Most of them are getting in somewhere around here. And then they're holding on for dear life here, buying more. buying more here, and then some people are getting in at every level. Hey, it was all the way up here. This seems like a good deal. Nope. Seems like a good nope. Seems like a good nope. Seems like a good nope. Nope. But eventually, all ends meet. And where I think all ends meet are very close now. And this is where I get excited. Remember how I wouldn't talk about the GO token? We can start talking about it now. Now that everybody's so underwater, we're not there yet. Now you need that catastrophic drop that breaks the back of almost every single holder. Which I think we're in the midst of it right now. How low did this thing say it was? 19 cents? Oh my God. But I just want to know another thing too. This is what I always ask. For all those people that were talking about this, are they still holding your hand on what to do now, or did they cash out and they're rich as hell and now they don't care? These are the same influencers I tell you every day, every week, every month of the year. Once you know, and you shouldn't be watching anymore. Hey, if I do it, you shouldn't be watching. It's that simple. So let's see. And I could name off a few of them, but I'm not going to. They're the ones you guys tell me to buy and watch every single day. But look how beautiful this is starting to look now. Now it's looking nice. Remember with XRP Healthcare, I ripped on the same way and I said they were talking about it at the wrong time. I'll tell you when to buy it, and I did. And now we have to wait and pray and wait and hope and wait and wait. And then eventually we're not going to be waiting anymore. See, I always say you're waiting until you're not. Just like with XRP. We were waiting for the breakout until we didn't. Or until we weren't. And now the people that are complaining aren't even realizing we're up like still almost 10x right now. Oh, I'm sorry for that. I'm not mad at XRP. I'm up 900 and something %. Why should... Like, is anybody else in that position with me? People are like, why are you so happy with XRP? Oh, I don't know. I'm up almost 950%. That's probably a good reason. Or 900%. Yeah, I'm up almost not. Yeah. It's a good reason, right? Not to mention the sum of it we bought at 38 cents. I mean, look at 38 cents 4 months ago, and it's, yeah. See, 60 cent XRP. That's what I mean. Anybody who's an XRP under 80 cents should be very happy right now. You're at least at a 4-bagger right now. And that's what I mean. You got time to... Actually, not a 4-bagger. What would that be? Like 75 cents right now? Whatever the case may be. You guys know what I mean. But look at this. The GO token now will become desirable here on the next drop. Because I find it hard to believe if it falls below this, it's over. I mean, it's not over. But I would say a very desirable spot would be that 0.7 mark. If it comes down to 0.7 and it actually breaks through the short term, like descent, watch this. And we're just trying to kill time to do to 230. And we already know about all the other charts. Why not give this the most analysis and coverage I ever have now that it's about time to cover it? Oh my God, I can't imagine how much people made out of this though. And how much retail lost. Like this one's a crime. This one should be you know how they do stupid videos and series about crypto? This should be the true nature of regulatory affairs. They should make it illegal. Oh, you heard it. Illegal for an influencer to take tokens as monetary payment to talk about it in a positive light so that his audience can get rocked. I think it should be illegal and it should be punishable by felony. I wish it was. It would make my job a lot easier because I'd have no competition. I literally wouldn't. There would be no competition left for me. I dare say I don't think there's a single soul that does what I do in my position that doesn't take these offers. I just don't see it. I wish I did. But they all talk about the tokens I would never talk about for the very reasons I tell you. It's disheartening. Anyhow, so assuming that this doesn't hold this descending wedge or triangle, whatever you want to call this, because it technically could break out from here. I just have a strange suspicion it might cut in half from here. We'll see. If it does break out from here, I mean, it's a very volatile swing here. Eventually, this is going to break out. I'm just telling you right now, eventually this is going to break out in a big way. So just because we think it's over, I think it's starting to build a big cup. And it's doing it because it's a meme-style token. It's doing it at a but it's on the XRP ecosystem as a meme token. I mean, that's something. But... And we've talked about this way too long, but we've been trying to kill way too much time here. So, you know, I'm always looking to make some easy money. Let's say this drops off to that 0.7 mark. I'd be highly interested for the bounce back up. Even if it's only to 30 cents, that's like a 400% push. Even if it's only to retest the bottom of here, it's back up to about... Ooh, this could get very low if that happened. Maybe it's lower than that. 6 cents for a bounce back to 12. I mean, you're still looking at a 1x push very quickly. Any signs of volume coming in? Not particularly. Not looking like there's any signs of the reversal there. If you're a long-term holder, then this is nothing. No. The Cannabis Podcast, I do agree in a sense, but it's never not anything. Like, that's the thing. It's never not anything. I always think that there's a rhyme and a reason for what we're looking at. Like, if you're a long holder, there's always a reason for this. Like, it makes sense. You know why? Because what if you're a long holder of XRP, but all of a sudden you're like, XRP is not the only ISO token, and it has run all this way, like Tom keeps saying. And now I'm sitting here and I may not own any XLM, and it's got that massive potential there. Maybe it doesn't play out. Maybe it does. You've got Algo here with that massive potential that seemingly, maybe it doesn't play out. Maybe it does turn into a reversal. Maybe this is, but maybe it isn't. If there's opportunities though that haven't even played out. The thing that makes me very curious here is the fact, one, we haven't done the 5 waves in an Elliott wave, which if you know anything about the Elliott wave, it's not possible if you're doing the Elliott wave not to have 5 waves if it's a 5-wave move. So, and this is a 5-wave. So the fact that hasn't culminated yet, the fact that certain things haven't, it's so weird. You explained it way better than I could. I appreciate that.
Somebody asked what the Crow governance token you mentioned this morning was.
The which one? Oh, the Crypto.com governance token. Hey, some people are listening. That is the Bara, but see, it's very, it's B-A-R-A. It's Capybara Nation. It's a governance token. But it's, trust me, with the volatility, that V-shaped recovery might not mean anything. So, like I said, I'm letting this go for a long time. And the only reason I stake some of these, too, is because on the Crypto.com, and if you use their Crypto.com Visa card, literally, you get so many rewards. I can't even describe how many rewards you get. Like, I don't want to describe it. That's why I shared the link of Crypto.com in case anybody wanted to use it. Because somebody was talking about it in the audience, and it just... Oh, it comes in big time handy. All the time. Yeah, paid for...
Every day.
I do. Every day. And then I get rewards as if it's a credit card, but it gets paid to me in CRO. And when I spent the down payment and the first third of the $8,000 for the kitchen and the $4,000 for the windows, the amount of CRO I got back when it all was said and done, I was surprised. So, anyhow, but that's the setup right now. It had an artificial fallout. It's made what looks like a nice V-shaped recovery, and these tend to sometimes turn into these nice inverse patterns. And if this did play out, I mean, you'd be looking at a pretty substantial rise out of here. Now, if it breaks down, I mean, that's what I'm saying. You could come all the way back down here. It all depends on the volatility of the market right now. If the volatility brings us down and CRO goes down 15%, well, you might be able to pick this up, and I would pick up a lot more. I don't know if it'll come all the way down here, but yeah, you ever hear the expression where there's a big wick? Sometimes we come and fill that entirety. So there is a chance that it cuts in half. Right? So I'm not telling you to go run and get it. I'm just telling you why I do it. And then if it breaks up, you could be looking at that area. And it very well could make a big cup in time, or it could make an inverse pattern, but anyhow. Yeah, the rates were unchanged indeed. It's pretty interesting though. Gold down 16 bucks. Silver up 26 cents, so almost 1%, and gold's down just over almost 3/4%. So we've got opposite reactions there. Crypto market, though, with it being held the same, that's why we had that long discussion yesterday of what you could do. I mean, it seemed pretty obvious that something big is about to happen. Now, maybe everything breaks down. Maybe these patterns break down. But Bitcoin is a big teller of all. Bitcoin's not even close to breaking down right now. We're actually on the outside of a symmetrical triangle breakout. That's the unbelievable part of this. Like, we're not even ready to break down for Bitcoin. It hasn't even given us that sell-off signal yet. Now, yeah, maybe it comes back down here, but if it did break out, I mean, if you're looking at this in totality now, it's up there still. If you look at it from max capacity, so it's we haven't fallen down yet. I'm going to be anxious to see what Jerome Powell says, because if he says anything stupid, the market's going to tank even more. If he says something, let's say this is one of those, we stayed the same, but the market's this and that, but he starts speaking in a good nature, well, it's going to be interesting. That's why in my live I said extreme volatility imminently on XRP. Well, and that was for crypto as a whole, as you know. Yes, it's the CRO governance token. It's basically like how XRP, I guess you could say in a sense, is the governance token of the XRP ledger. Well, they have the CRO token as well. But it's, you gotta look into it more. It's pretty cool. But it is I mean, you can look at it. It's a meme style token. That is for sure. But look at it. If these are going down, and this is unfortunately what I was talking about yesterday, like, it's not that I wanted it to go down. It's just everything we're seeing doesn't look good. And I wasn't convinced because we got rejected at $3.19 like we should have to continue consolidation. But at what extent here? Like, the hope here is, I think, for Jerome Powell and Trump, for them to actually do the let's cut rates for the rest of the year, is to see the markets tank real quick. Imagine, the markets are all dropping. Is it dropping past $2.63? Maybe. $2.57.9 is the bottom of this channel. And I'm going to tell you right now, you do not want to keep going back down there. Because I talked about the possibility that this is a hangman pattern yesterday. And some people were on board with it. Some people were kind of like, are you seriously talking about this already? Like, and I said in 2021, it wasn't the first push-up that convinced me. It was the second push that ended up forming like a right shoulder. And it's not the hangman in itself where he's actually hanging on the pattern. But this is what I was talking about yesterday. Like, are we doing something like this? And if we are, it would have brought us back up just to bring us, shooting us right back down on this section. Like, we came up, we've been doing this, and on the drop down, we come up just to come right back through. And if that's what we're doing, it's not the first time we've seen this. Like, it's not the first time we've seen this. You know, it's not. In 2021, I was doing this. We've seen this before. XRP, and maybe not to this extent. Let's, that's going back too far, because that's not how it looked. Yeah, that's 18. I was going to say, it didn't look like that. Right here. So, we actually came down, pulled back up, and it looked like maybe we were going to start to pull back. But we never came through. Once we made the top, we never came back through it. And then we hung and we fell. And then we just materialized and it took a couple years. Now, it's not identical here. It's not identical, but we came to the top. We came down. This time we at least came up part of the way. But now we've just simply fallen off. And now we come up. And now it's my worst fear right now. We talked this morning about how we had two inverted hammers back to back. But if rates stay the same or they raise rates, this likely will turn into a long leg doji. And then I've seen it a million times before in the past where it looks bullish on back to back candles. And then there's not enough to materialize it. And then all of a sudden you end up with a long leg doji reversal candle that looks so promising. And then it just ends up turning into a hangman style pattern. Not much. There's not much implications for XRP. They're not. It's not going to be ruled as security. Like, unless something, is anything aside from them going back in time and changing it to a security now, nothing's going to happen. All that's going to happen is we're going to find out how much bigger of a fine they have to pay. I don't care. You can insert X amount of dollars. It doesn't matter to me, the fine. As long as it's not a security, I don't give two. I don't give a rat's ass about the lawsuit anymore, as long as it doesn't have to do with them making it a security. Anything short of that, I don't make them pay $1 gazillion. I don't care. No, it wouldn't take the utility away around the world. Absolutely not. And remember, that's not going to happen. Trump's pro-U.S. crypto companies. You really think they're going to take away their largest player in the U.S. crypto space, along with H-bar? You think they're really going to take out XRP now? I don't think so. They got offices. Well, I mean, did the office burn down in California? I don't know. Maybe. Hey, how about those Chicago wildfires, huh? They just happen to pop up out of nowhere. Isn't it convenient that they give a news alert on the weather broadcast in Chicago that said warnings of possible wildfires in the middle of winter? But hey, I digress. I mean, I understand wildfires are very common in Michigan in the wintertime. And Chicago is literally right there. So, and anyhow, we only talk about fires because, man, is it smoldering in crypto right now, and the market is dropping like it's hot, some would say. You know, not showing my old man lingo, but there's something rotten everywhere. Oh, there's a fire behind me. Look at that. Yeah, I know, -20. Oh, look, a rampant forest fire. Did you see the comment, Julie? Julie. This guy said, oh, look, at -20. Oh, look, a forest fire. Or a wildfire. It's true, though. All right. Let's, yeah, the ice fire. I think that's why it's blue behind me. No. No, I've said too much already, but I'm just saying, isn't it amazing? Told you they think we're stupid. I mean, we don't have much to tell them in ways that we're not. All right, here we go.
Looks to have risen above 2%, bolstered by resilient consumer spending.
Oh, yeah, I bet it is. Wait a minute, how long has he been talking? Okay, he must have just started. All right. Ah, there he is, the old... All right. Let's hear what he has to say today.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall.
How much bullshit am I going to say today?
And has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth.
Let's see what kind of favorable questions are.
The jobs to workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance.
Hold on, ready? We're going to get ready for the key phrase now. I'm not going to pause it anymore, but we're going to hear the data. We need to see the data. We need to see further evidence of the data. Get ready for the key word. We need to wait for further data.
The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the consumer price index
Why
and other
2%?
data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we'll be open to new ideas and critical feedback.
Like how these people
and we'll
are
take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Chairman Steve Leisman from CNBC.
You know, I should just make this like a censor bar. When he says something, I'll just say, I'm going to have to stop you right there, sir. You sound like a complete jackass once again. We're going to have to get back online here. Put down the notes first. I'm like, God. Lord have mercy. All right. Somebody said we need to light up a doobie, Julie. Do you agree?
I was just going to say.
Ooh. Fact check them. Well, this is the simplest fact check I can give you. It's all about the data. He doesn't know anything. And let me ask you all a question real quick. Why do we have to go to 2%? Why not go to 0? If you really want to, why would you keep it at 2%? They only said 2% because we used to have it at 0. I don't know. It's crazy.
Mr. Chairman, at an event in Davos.
Oh, here's Steve Wiseman.
Davos anyway.
It's right in the name. Lies, man. Lies.
Immediately. So I guess I have a three-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
Three questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we.
Hold on. It's not important to him what the president says. What do you mean? You're the one who runs the show. Like, the fact that he always says it's not my place to comment. No, in fact, hey, buddy, it's certainly not my job. It's your job. Like, who? If it's not your job, who the hell's job is it? This fucking guy, you know, like.
Always have, focusing on using our tools to achieve our goals. And
listen, that would be like me saying, and I won't interrupt it again. That would be like me saying, I'm XRP future millionaire, but it's not my job to give you updates on XRP. If it's not my job, then whose is it? I'm literally XRP future millionaire. My channel's based around it. I know everybody likes when I interrupt them. That's the problem. Like, I get more popular when I interrupt this guy. Oh, no, I know what you mean. I know what you mean. But hey, I'm not selling shit. This is all dog and pony show. Wave 5 hasn't happened, and I'll go down with the wick off accumulation if it doesn't happen. I'll go down fighting with the wick off. No wave 5 has happened, and no target has been fulfilled, the $5.39 approximately, or $5.49 that it showed me out of the wedge. I don't care what the market does. It can dump all at once. You know? I'm on the wrong shoulder. I should be on the left shoulder. Yeah, bastard. Let me go over here.
Really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated this demand to you?
I've had no contact. Thanks.
Dick. Did you just call him Dick?
Nick Timmeros, The Wall.
Oh, Nick. I thought you said
Powell,
Dick.
you and
I was going to say,
several
finally,
of your
somebody with some
colleagues
balls
said
over
at the time
there.
of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market development since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened.
Dude, if I
We've
want this
gotten
much
more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial
Whoops, was that a
conditions.
cheap shot?
I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're
Indeed,
seeing
I am.
the economy move
Indeed,
toward
I am.
2% inflation and has moved largely to maximum employment. So we literally look at the movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance, and I'd say you look at the last couple of inflation readings, and you see we don't overreact to two good readings or two bad readings, but nonetheless, the last couple of readings have suggested more positive readings. So I think policy is well positioned.
Colby from the New York Times. Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No, so let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market, and we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret too good or too bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been some encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think
wait a minute, you'll be able to see it. I got
it. In the mode of
because there's no light
to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much. And I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently.
In case you don't know, that says dummy above me.
Watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some.
I know he's lying because my hair grows when people are lying. And literally, I just got my hair cut. Look what happened while he's been talking. I had to put it in a fucking ponytail. Like, he must be doing a lot of lying for my hair to get that long. Like, look at that. How much lying is this guy doing? Can you stop? It's going to be down to my ass soon. I won't be able to walk. I look like I have a tail.
Elevated uncertainty because of
This guy said, haha, I balled it when people lie.
Areas that I mentioned. Tariffs, immigration.
I'm sorry. Sometimes people just make me laugh. It is too hard for me to stay quiet. Live Your Dream said, haha, I balding when people lie, sadly. Getting quite bald, man. Oh, priceless.
Fiscal policy and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold waiting to see what comes down. It's a very large economy, and policies affected at the margin, but we're going to wait and see.
The idea that you feel the economy, that policy is restrictive, suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you should hold?
we're looking, it's more the way it works is we are looking at the data to guide us in what we should do. And, that's what we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And, as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy. And so we feel like we don't need to be in a hurry to make any adjustments.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say, yes, others, we're reviewing the orders and the associated details as they're made available. And as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law.
Right.
He's been tolerating my life. Good. Real good.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
As I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook.
When do you share the data with us? You're always studying it, but we never hear about it. Fucking data, it's like a ghost.
Understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, lots of research shows that's the best way for.
Like, if I'm being brutally honest, I've seen more of my grandpa who died in 2001 than this data that they speak of the last several years. I'm just being honest. So, I mean, that's crazy.
Central bank to operate, that'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see they're alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that the range of possibilities is always broad, and not just now but always. And it's hard to be open to just how broad the possibilities are.
I like that a lot.
No one saw the pandemic coming.
I like that a lot.
Changed everything.
Listen, I'm sorry, I don't mean to keep interrupting, but I tried not to say anything, but you see what I'm building. I like this a lot. If this plays out, that's a nice V shape, formed a bull flag, and then the technical target would be up here at $3.59 if this plays out. If it plays out. If it doesn't, for whatever reason, if this doesn't play out, we'd be looking at, somebody asked if we can get under 280. Oh, yes. $2.43 if it doesn't play out. But right now, it looks like it wants to play out. It looks like it's a big shuffle like we've been saying, but you never know until you do.
So things happen, and but yes, we do that. But it's different. It's one thing to do that to make assessments about what might happen and begin to think about what you might do in that case. But you don't act until you see much more than we see now.
Katerina Saraiva, Bloomberg News. Last month you talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. We want to see, further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, that then we seem to be set up for further progress. But being seen to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. Remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. And so it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing, the ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our two goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Oh my God! Yes! It's actually forming. I've run this scenario like 18 times and it never is in the right spot. This is actually forming. Oh my God! Please let this form. Oh my! If this is actually, oh my God! Oh my God! If this, oh my God! I'm gonna. Oh my goodness!
So what's happening is that the flows across the border have decreased very significantly, and there's we expect that to continue.
Oh my God!
And so,
like literally,
job creation has.
I'm gonna let him talk, but oh my God, just watch what I'm drawing down here. This is actually oh my God. If this, oh boy. I'm not spitting shit out. You guys are watching old man Jerome right now.
Come down a bit too. So, if those two things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a
Either
time
way,
when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
You know, we run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Chris Rugaber at Associated Press.
Yeah, see?
President
We got no
Trump has said
problem.
he will lower
There's
inflation
no problem
by
here.
reducing gas.
There's no. I didn't have to say anything because I've shown you this before. I just did it in a more dramatic way. There shouldn't be any problem here. Remember the cup and handle? Remember the technical target in the end? We haven't finished it yet. So until we do, I don't see anything different than it's just building a handle. I really don't. I cannot be any clearer. These patterns aren't finished. If they don't make it out, so freaking be it. But if wave 5 doesn't happen and these cup and handles don't play out, well, call me Sally and strike my riches because I don't freaking deserve it anyhow because we've been swifted, fleece, heisted, and shiced and kicked in the nuts more than you could ever imagine on a scale more manipulated than would ever be desirable. So I'm going to go with the opposite and say we're just getting started because we're not at 122,000. And no, this bull market isn't over. In all intents and purposes, if this plays out, because everybody is getting the, I'm getting excited. Oh, you smell that? Oh, yeah, that's fear, uncertainty, doubt. And also, you hear that? And smell. You hear that? That's the sounds of the crying souls who have the fear of missing out. That's not the servitudes of hell. That's actually the crying souls of the ones who didn't buy in the bear market who think they're missing out. It does explain meme coins even more, but that doesn't mean... Did you see what I drew down there for Bitcoin? Before I let this doofus talk again? It could still come all the way back down to 96,000, 95... What is this? 96,000 with this descending triangle playing out. That is super bullish handle. It is super bullish. So that's why I said you got to break through and you're super bullish till 114. But ultimately, if it plays out, it would be up all the way to 122. And that's where the pattern's set to finish. And that's what we're targeting to finish. And what does that mean for XRP? Well, we don't know. We know it's supposed to go to 539 or 549. What does it mean for some that haven't even really started the movement? Well, that's where, my friends, is where it's interesting. Now, for some who say they don't want us to be rich, that is true to an extent. To an extent, because they do make the tax money. What they don't want is a surplus of people being rich. Just enough to where you have enough for the ruling interest. But remember, where we think we're getting richer as a people, think about how many people who are not in crypto as a whole. In the USA, if I talk to 100 people, maybe one person's in crypto. I'm not even joking. It's weird. Like, talk to your peers. How many of your mom and dads, brothers and sisters, cousins, ones who aren't familiar with finance, how many of them are in crypto at all? Nobody is really in crypto. That's the crazy thing. So I think utility tokens are going to have an explosion like we have not seen. It's just like when I talk about commodities, nobody's in the shit. You ask somebody if they own money, they're like, yeah, I have the dollar. I'm like, I'm not talking about the dollar. I'm talking about money. I'm showing you money. No, you're showing me a unit of debt, asshole. Money. Do you have any money? That's why I always say, do you have an asset? Like, do you have something that you can... It's weird. So anyhow, let's continue listening to these idiots. These people asking questions are... Oh my God, I wish I could ask a question. I really do. So Jerome, if the economy's so good, why are so many people working 3 and 4 jobs just so that they can make the same sustainable earning wage or livable wage that they used to on one income? Or why can mom not stay home? Or I'm sorry, in this time, because we want to make sure nobody gets their feelings hurt. If X, Y, and Z are there, X being one parent, Y being the other, and Z being said child, why do X and Y both have to go to work now when back before only X had to go so Y could stay home? It's kind of funny, like the XY chromosome is trying to tell us something, Julie. I don't know. It's almost like there's something to this. But anyhow, let's continue before I say something I get in trouble for.
Energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to.
Oh, and Julie, we can order
react
food
or
tonight.
discuss anything that any elected politician might say. So I'll give you a mulligan.
Thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times. And I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks, Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course. As I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped.
This guy give anybody else a headache. Like, Jesus, this guy sucks. We only got 10 minutes left of this nonsense. But hey, I think it's important to hear it all. Like, we need to hear it all. I wouldn't be worried either. What's going on? Not a whole lot. Not a whole lot.
Bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes, never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Clear.
Please get into the issues. I want to hear him, damn it. Give me something. Like, give me something. Like, I'm listening to the FOMC meeting for what seems like the last 6 years now. Give me something. Like, oh my. You can't even give me something at the last 5 minutes? You're not going to talk about it. When are you going to talk about it? On your golf outing? Like, what the fuck?
Claire Jones from the Financial Times. 2 questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
I'm not willing to answer this question at this moment.
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There was a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know.
Anti-communist, the country. It's so fortunate I live in that very country you speak of.
I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2018. Yeah, we didn't really know. And, the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Thank you, Courtney Brown from Axios. 2 unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
So, let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As all.
No, there's nothing boring about XRP. I bought it at 35 cents, not what, a year and a half ago? And then bought more at 38 cents a few months ago. They're not boring to me. The only thing boring is the numbers below where my bank account, well, not bank account because I don't use the bank, but let's just say there's nothing boring about seeing something go from 35 cents up to $3 and like I'm just saying. And I've not seen a single down moment in terms of my portfolio from the starting point. It has never been down. You know, so I don't know what everybody else is talking about. Like some of you guys come in here and try to rag on some of the people who have done very well. I mean, if you don't like making 900%, just let me know. I don't like if that's your prerogative. You tell me where you can go outside of crypto, and maybe if you find the proper stock at the right time. But where are you taking your money in the last 4 months and making 900%, my friend? I'm just asking. And yeah, if you bought it at the wrong time or XRP is just a pile of shit, or I'm not asking what everybody else bought it. I'm just telling you from my perspective, it's a great fucking time for me. I'd much rather be doing this than go jerking off somebody else in his business to try to make a living. I'll tell you that much.
We stand ready to take appropriate action to support the smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label.
Caldwell here. Since I know you don't care about having any class or integrity because you bought Bitcoin at a good price, how about this? Why don't you do what I do for free and come on here every single day and build the proper audience for people within a bull, bear to bull, so that they can go not only from a horse cycle and within themselves, since you know so much, come on here and teach them the fundamentals that you understand. Anybody can get rich at a certain point, but it's the way you present that knowledge and what you've learned. You don't have to throw anybody any dollars, but what you can throw them is what you know. You know, so... Oh, I don't give a rat's ass about the haters. I'm just saying in general, if you're like this person, use them as an example. Don't get hateful. Don't get spiteful. But let it be a lesson. No amount of money can change if you haven't, you can do so much more. You can do so much more. You could do so much more. Let it be a lesson, everybody. To be honest, the Lord works in mysterious ways. Let's not kick him. Let's just let him have his vengeance and his peace of mind. But the Lord does work in mysterious ways. You know why? Because with that mindset, no amount of money you have, like, you could transcend the people around you, and not just the people around you, but create a bigger and better, not tomorrow, but a bigger and better foundation for today. Like, but instead, you've chosen to take the route of, I'm better than all of you. That's never gotten anybody anywhere. You might as well be fucking Jerome Powell talking in this conversation section, because you're worthless and you're honestly useless.
These events, although of course we're all watching it with interest.
Simon Urbanovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point, back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So, I don't think I think these higher rates are they're probably hold back housing activity to some extent if they're persistent. We'll have to see how long.
Live your dream, and then I'm not insane. But I love that. My advice to everyone is don't hold your hope on just crypto or stocks. Work your hustle, make a plan. How much is rich for you? What you're gonna do? Set a target so you can. Yes, exactly. See, my whole income is not on just trading, but it is a part of it that allows me to be comfortable. But still, I agree with you, because you need, like I say all the time, you need to have some kind of income coming in while you do this. Even if you're making money trading, you've got to have my living has nothing to do with my actual trading anymore. It used to, but now that I understand more of this, now my money that I have can work for me in different strategies. See, like, that's the thing. Like, you're absolutely right. Like, you got to have money coming in, even if you're trading. So you've got to have the steady money that's paying the bills. It's that simple. I cannot agree with you more.
Persist. So, you know, we control
Nothing wrong with that.
Rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Somebody said they have XRP post-traumatic stress disorder. Come on, Jerome, are we done yet? I'm done. Like, come on.
Chair Powell, Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we...
No, Mike. Axelom's had enough morphine. It needs a little bit of Viagra here is what it needs. It's been lolling along long enough. We don't want to give it more morphine. It's already in a zombie-like state. We need something to spice it up. We might need to give it, like, what would spice us up real quick? Well, you know, we need... You get it.
Need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking
there you go.
Policy stance is the right one to achieve maximum.
For the record, I've never tried cocaine, but
so I
agree with that sentiment. You're gonna have to send it in.
But we think
Somebody said Italian
as
sauce.
I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis, although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
You know, I want to avoid commenting even indirectly on the conduct of tariffs. You know, it's not our job, and it's our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, praise it for that matter. It's just not our job. I do think that, you know, we found in 2018, there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
So we look from a financial stability perspective at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated by many metrics right now. A good part of that, of course, is this thing around tech and AI. But we look at that. But, you know, we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective. And we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think about that. We look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents a tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment has stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier, one is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at. I think it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level, because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But, overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there.
See it. He is a liar.
Given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy is, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see it. There's nothing in the data yet on that. But you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But I know you don't see that in the aggregate data yet. But yes, you hear it anecdotally.
Thank you, Chair Powell. Nicholas Jasinski from Barron's. The uncertainty is certainly a theme today, and I'm wondering, are there any periods from your career, or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
I guess I'd say this. Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. The possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good labor market.
All right, Jerome, we all know what you mean about, I know what he means when he keeps talking about the data and how he can't talk to us because they got to keep reviewing it. We all know what they mean when they have to have these meetings.
We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6, and that's what the public experiences. We look at core because it's a better indicator of.
That's what they're doing.
So yes,
that's what he's doing.
Went up a lot for inflation.
That's the problem.
People are feeling that, and they're not wrong.
That's the problem. They're all doing drugs together instead of doing this. That's what they're doing.
But so the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are not for us to criticize or praise really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table? And then additionally, are you looking to see better than expected data on inflation to cut? Or are you looking for inflation data that roughly aligns with current forecasts?
So, as I mentioned, the economy's strong, the labor market's solid. Downside risks to the labor market appear to have abated. And we think disinflation continues on a slow and sometimes bumpy path. that tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
Whether or not you need to see better than expected inflation data or just inflation data that roughly aligns with your current forecasts.
You know, it's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And, you know, that's what we want. We'll know it when we see it. It's going to have to be something that isn't just idiosyncratic. You're going to want to see, you know, continued progress with housing services inflation. You're going to want to see inflation behaving in a way that builds confidence that we are really making progress. That's what it's going to be. And, I mean, is that better than our expectations? We expect to see that. It's just a question of when.
Chair Powell, Scott Horsley from NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if a central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it. If I'm being at all unclear, we're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because the solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates.
Look at DGB all of a sudden up 6.3% on the day. Look at our baby. It's trying.
Unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of inflation, of unemployment, with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, we said what we said was that at times when inflation persistently undershot 2%. We would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision we looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Go to Mark for the last question.
Hello, Chairman Powell. Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct.
Oh, because it's too loud. All right, everybody, I'm going to go. My son, he's been patient, but Jerome, I'm going to go so I can go deal with my son and stuff, but in a good way. But we'll be back later. I'll update everybody in a little bit. Hold on.
from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
So our role with Bitcoin really is to look at, with crypto, really is to look at the banks.
Oh,
To look at the banks, and we think it's, banks are perfect.
Finally, here's what we've been waiting for.
Able to serve crypto customers as long as they understand and can manage the risks, and it's safe and soundness. A good number of our banks, right, that we regulate and supervise, do that. The threshold has been a little higher for banks.
They finally talk about crypto, Julie.
Really nothing to do with the decision to. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But
how far? Where was this at?
Supported what we did to bring inflation down. Those things we'll know it when we see it, but more the expectation is that we will make continued progress.
I don't remember. Does anybody remember where this was at?
Discuss that again. That'll be one of the many things that we discuss, but I don't think that insight is wrong. We didn't, we said, what we said was that, right, that we regulate and supervise, do that. The threshold has been a little higher for banks engaging in crypto activities.
Oh, here we go.
And that act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision to. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Go to Mark for the last question.
Hello, Chairman Powell. Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
So our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and we think it's, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and soundness. A good number of our banks, right, that we regulate and supervise, do that. The threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new, and we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision. So.
And with respect to households and their inclusion in that asset class?
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have the securities laws that we have. It's why if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time, with members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do. Thank you.
That's what we waited for. That's the only reason I watched until the end, because I wanted to hear what he would say about crypto. It took until the exact last minute, the very last question. But that's actually, if you read between the lines there, that is huge. He put it in where he figured nobody would see it in the last 30 seconds. I always tell you, usually the last 30 seconds is the best information. It lived up to that today, because that was not a for-nothing press conference. He basically just said banks greenlit. They're fine. Even if they want to start to go into the business of doing it themselves, it's starting to ramp up a little bit. And they're basically saying they're just trying to regulate it, but they're talking about regulation every step of the way, security, whatever. But it's different, though. The digital asset's a little bit different than the other sectors, but at the same time, the government's open to it. It's like I've said for years. The government's open to it because this is the government's playbook to keep the U.S. relevant. I firmly believe they created Bitcoin and then Ethereum, and now XRP it's like the ladder up. Those two are kind of like, hey, that's old tech, but if people want to buy it, so be it. But they were like the two case studies. And now, you're not going to go after them because that's like going after yourself. XRP, it's a dog and pony show, and then it allows the government to keep printing money. And think about it. What if the government is one of these big whales we see in XRP, right? Let's just say they're one of the whales, and they've been pumping it in since they've been printing money. And now, who knows? Who knows what's going on? How many years this has been going on? But I firmly believe that that's what's actually going on here. And we're going to cook the books in the USA by having the banks be solvent by cryptocurrency. But in more particular, it's been put in the guidelines for decades. We didn't know what kind of way it was going to happen, but the banks had to maintain solvency somehow, and they know which way it's going. They can see by printing money that you're expanding the money supply, and it's going to make it basically pointless to stay in the same way. So eventually it all comes to an end. So they're going to circumvent it by saying we're going to go from a debt-based system, and we're going to kind of get away from that for a minute, and we're going to go to this digital sphere where it's just numbers on a screen now. Now we don't even need to print out money. Now we just have to make sure we have enough of this to cover that. But there's going to be a lot more security in between. It's going to be harder, but still. So they've had this plan for decades. You can't convince me that this just happened. It hasn't. This has been going on for a long time. We have a lot more to talk about, but I have to go, as you guys know. Have a blessed evening. It's been an honor and a privilege to spend this time with you, and I will see you before you eat.